At the beginning of your crypto trading career, you may have started with buying your first Bitcoin and stored it on your first wallet. After learning about exchanges and altcoins, you might have sent your first bought Bitcoin over to an exchange to invest in your first altcoins. However, all these different coins and prices can be very intimidating to a new trader, making it really hard to make good choices on when and what to buy and sell on the market. Prices are volatile, meaning that prices are constantly making big swings up and down, making crypto trading risky if you do not know what you're doing. Emotions start getting in the way, and FOMO, short for fear of missing out, might play a part, leading to losing trades. The volatility could, however, also lead to big wins. To make better choices in trading, taking a technical approach instead of an emotional one is the way to go. Traders use tools like TradingView to analyze the markets they're interested in. To do this analysis, traders might look at indicators to make decisions. Famous indicators are SMA and Bollinger Bands. The Simple Moving Average, or SMA for short, is a trend indicator that shows if the market is currently in an upward or downward trend. The SMA calculates the average price of a number of periods in the past. These periods are shown as candles in your TradingView chart. Since SMA is a moving average, it's not fixed since it's updated after a new candle is formed, thereby creating a line that smooths the price fluctuations. SMA signals a buy order when the fast-moving average crosses up the slow-moving average, and a sell signal when it crosses down. Bollinger Bands is a volatility indicator. It helps traders to identify upper and lower price range levels called bands. The indicator is displayed through 3 lines. One represents the moving average, and the other 2 lines show the standard deviations below and above the moving average. It signals a buy order when the price breaks the lower band, and a sell order when it breaks the upper band. Another great and easy-to-use tool that traders commonly use are supports and resistances. They're used by traders to indicate price levels that tend to act as a barrier. These barriers are used by traders to decide at which level to buy or sell and in what direction they should trade. Support shows the lowest price and resistance the highest. So let's say you see an altcoin that does not go below a certain price, and you see a price level that it has never broken. This means that the lower mark is a resistance to the asset and the higher mark a support. Using these and many other tools will help you become better at technical analysis. At this point, you'll be able to make well-thought decisions about when to buy and sell coins on your exchange. However, doing technical analysis takes a lot of time. You're bound to your computer, constantly looking at charts to see if it's the right time to buy or sell your assets. Since this is impossible to do 24 hours a day, you will miss out on great buying opportunities and have altcoins forever in your wallet that lost their value, hoping you will ever get your investment returned. To help you solve this problem, we created cloud-based automated trading software called Cryptohopper. On the platform, you can create your own strategy with your newly learned knowledge of indicators. Just simply add an indicator like SMA or Bollinger Bands, the ones that we just learned about here. And you can even test how it would have performed here. Another option is to just follow a pro trader who sends out signals to your hopper to trade. There are lots of them offering their services on the marketplace, some even for free. Simply select one, and once your hopper gets a signal, it acts on it. So now you're able to perform technical analysis. You perform constantly on the crypto markets, and your trading career has changed. You don't handle out of FOMO anymore, or just go for good fortune. This is how pro traders trade, and you're on your way to do the same. Happy hopping!